Let's break down tariffs. At their core, they're a fee or tax placed on goods entering a country from abroad. Governments use tariffs to control the flow of products across their borders and to influence the price of imported goods. By making imports more expensive, tariffs encourage consumers to buy local products instead, boosting domestic industries and jobs. This can make everyday items costlier, but it's designed to give homegrown businesses a fighting chance. In 2025, the Trump administration massively increased these import taxes, citing decades of what they called unfair trade practices by other countries. The move was both bold and controversial, sparking debate across the globe. Tariff rates soared to levels not seen since the Great Depression, targeting a wide range of products, from European cars to Chinese electronics and beyond. The scale and scope of these tariffs were unprecedented in modern times. The administration argued this would level the playing field, protect American industries, and bring manufacturing jobs back to the U.S. Supporters saw it as a long overdue correction to global trade imbalances. One major change, something that affected millions of shoppers, was the elimination of the de minimis exemption, which had previously allowed small packages to enter the country duty-free. Now, every overseas package, no matter how small or inexpensive, faced new fees and customs scrutiny. This was a game-changer for online shoppers and small businesses alike. This hit e-commerce giants like Shein especially hard, as their business model relied on shipping low-cost goods directly to consumers. Temu, another fast-growing online retailer, was also caught in the crossfire, forcing both companies to rethink their global logistics overnight. The authority for these sweeping changes came directly from the White House, bypassing Congress and using executive powers to reshape trade policy almost instantly. Stephen Moran, the policy's chief architect, was later nominated to the Federal Reserve, signaling a deep and lasting commitment to protectionism. Allies protested, markets panicked, and uncertainty rippled through the global economy. But the administration saw this turmoil as proof the policy was working, forcing other countries to the negotiating table and putting America first. The world was forced to adapt to America's new rules, whether they liked it or not. Global supply chains were disrupted, and international businesses scrambled to adjust. The global trade game had changed, and the U.S. was rewriting the playbook, setting the stage for a new era of economic competition and uncertainty. Wall Street went into panic mode as soon as the tariffs were announced, with traders scrambling to make sense of the sudden policy shift. The atmosphere was tense, and uncertainty rippled through the financial sector. The Dow plunged, wiping out billions in market value within hours. Companies with global supply chains saw their stock values nosedive as investors feared higher costs and shrinking profits. Investors rushed to safe haven assets like gold, which soared to record highs. The demand for stability was overwhelming, as people looked for any shelter from the storm. The Federal Reserve quickly warned that tariff-driven inflation was now visible and could persist, signaling a new era of economic uncertainty. Stagflation fears, rising prices, and a slowing economy became real. Shoppers noticed higher prices, while factories faced declining orders and layoffs. The Fed faced a dilemma: raise rates to fight inflation, or cut them to boost growth, risking even more instability. Every option seemed to carry serious risks for the economy. In August 2025 alone, the U.S. collected nearly $30 billion in customs duties, a huge jump from the previous year, as imports became more expensive overnight. While the administration touted this as a win, economists called it a massive tax on American businesses and consumers. Small business owners in particular struggled to keep up with rising costs. The Consumer Price Index jumped nearly 3% year over year, squeezing household budgets and fueling public frustration. The message was clear: this trade war would be messy, expensive, and unsettling for everyone, from multinational corporations to everyday families. The markets braced for a long, painful conflict, with volatility expected to become the new normal. The era of easy global trade was over, replaced by a world of uncertainty and economic tension. Canada, America's top trading partner, was hit hard by a new 35% tariff on most exports to the U.S. integrated supply chains, especially in auto, lumber, and agriculture, faced chaos. Instead of retaliating, Canada turned to the USMCA's dispute resolution process, hoping for legal protection. This left Canadian businesses exposed and jobs at risk, especially in manufacturing hubs like Ontario. The government scrambled to diversify trade, but replacing the U.S. market overnight was impossible. The end of the de minimis exemption hurt Canadian entrepreneurs selling online to Americans. The sense of betrayal was palpable. A trusted partnership had turned hostile. For ordinary Canadians, the tariffs meant higher prices and job insecurity. The country was economically chained to an unpredictable neighbor. Canada's future felt uncertain, with recession looming. The pain was immediate and personal for businesses and families alike. Ottawa's gamble on legal remedies left many feeling vulnerable. The once stable relationship was now defined by anxiety and distrust. The EU was blindsided by sudden US tariffs, including a sweeping 15% levy on key exports that sent shockwaves through European capitals. The announcement came with little warning, leaving policymakers scrambling to assess the impact and formulate a response. Germany's auto industry, a cornerstone of the continent's economy, was hit with a crippling 27.5% tariff. This threatened not only jobs and profits, but also the stability of supply chains that stretched across Europe. The move fractured the EU's unity. France pushed for immediate retaliation, demanding a strong response, while others urged caution, fearing further escalation and damage to their own industries. Meanwhile, the US pressured its European allies to impose similar tariffs on China and India, straining already fragile alliances and complicating global trade negotiations. The EU delayed new sanctions on Russia, caught between US demands for a tougher stance and its own economic interests, especially in energy and trade. Some products, like French wine, were spared from the harshest measures, but most European industries faced steep new costs and uncertainty about the future. Companies like Swatch responded by raising US prices and even mocking the tariffs with satirical products, turning frustration into a form of protest. The chaos exposed deep divisions within Europe, as leaders struggled to find common ground, and the continent's global position weakened in the face of mounting challenges. Long-standing alliances were tested as economic and geopolitical priorities clashed, and trust between partners eroded. The EU struggled to respond, torn between defiance and appeasement, as leaders debated late into the night over the best path forward. The transatlantic relationship was under unprecedented strain, with both sides questioning the future of their partnership. European leaders faced tough choices with no easy answers, as public pressure mounted and economic forecasts darkened. The new trade reality was chaotic, costly, and deeply unsettling, leaving Europe at a crossroads in a rapidly changing world. For Americans, tariffs meant higher prices at the checkout, on everything from electronics to groceries. Retailers like Walmart warned of more price hikes as costs rose across global supply chains. The end of the de minimis rule made online shopping from overseas more expensive, killing many international bargains. Consumers faced tough choices: pay more, buy American, if possible, or go without. The auto industry was especially hard hit, with new tariffs on imported parts driving up car prices. Yale's budget lab projected nearly 1 million Americans could be pushed into poverty by 2026 due to rising costs. Lower-income families felt the squeeze most, as essentials became less affordable. The tariff's true cost was paid by households across the country. In August 2025, a customs letter suggested Swiss gold bars would face a 39% tariff, sparking panic in global markets. Gold prices skyrocketed as traders feared a supply crunch for the COMEX exchange in New York. The Swiss Precious Metals Association warned of massive disruption to the gold market. The White House scrambled to clarify, calling the reports misinformation and promising an executive order. For days, uncertainty rattled the financial system. Then President Trump announced gold would not be tariffed, calming markets. Gold futures dropped but remained high, reflecting ongoing volatility. The episode exposed how a single customs ruling could shake the global economy. In this new era, even accidental policy moves had worldwide consequences. The gold scare was a warning. Trade chaos could hit anywhere, anytime. As the US doubled down on tariffs, the world adapted, often at America's expense. Russia, India, and China deepened ties, building a parallel economic system less reliant on the dollar. Mexico, under US pressure, imposed steep tariffs on Asian goods, disrupting North American supply chains. China retaliated by targeting US tech firms, adding leverage in trade talks. Negotiations became tense battlegrounds, with the US extracting concessions from some allies, like Japan, while others, like South Korea, resisted. Countries launched legal challenges at the WTO and imposed their own tariffs. The global trading system fractured into competing blocs. The US used its market as a weapon, but others learned to fight back. Old alliances shifted, and new partnerships formed in response to American pressure. The world was building alternatives to U.S. dominance. The administration's strategy sparked a global realignment. The rules of trade were being rewritten by everyone. The era of U.S.-led globalization was ending. As the dust settled, experts warned the tariffs' short-term gains would be dwarfed by long-term pain. Global supply chains, built over decades, were thrown into chaos, raising costs and uncertainty. Economists predicted a global trade slowdown, echoing the disastrous effects of past trade wars. The Supreme Court prepared to rule on whether the president had overstepped his authority, with huge financial and political stakes. If overturned, the administration could be forced to refund billions in tariff revenue. The world faced a crossroads: de-escalate and return to rules-based trade, or continue down a path of fragmentation and volatility. The costs, higher prices, lost jobs, strained alliances, would be felt by all. The shadow of the 2025 trade war threatened to darken the global economy for years to come.